Welcome to Business Authority Radio, bringing you insights from today's thought leaders, professionals, and influencers. With your hosts, Neil Howe and Craig Williams.
Hello and welcome to the show. This is your host, Neil Howe, and today my special guest is Michael Plaks. Michael is the founder of REI tax firm based in Houston. He is a national authority on IRS taxation and real estate business. Michael is known as the black belt in real estate taxation, and he frequently writes and speaks on these topics. So welcome to the show, Michael.
Thank you, Neil. Happy to be on your show.
Well, tell us a little bit about yourself and how you got started in real estate taxation. Tell us a little bit about REI tax firm and what kind of clients that you help.
Oh, gladly do so. Well, how I started in that, you asked me, that's an interesting story because my original background was in IT, and I came to US 25 years ago and became a self-employed consultant. And then the first year doing that, I've heard, well, there is this thing called income tax that you have to deal with. And they said, well, how do I do that? And say, well, you go and buy a book. It's very easy. And the book gives you step by step. So I went like 5 days before the deadline, bought a book, and here I am. I'm reading the book. I understand every word, every sentence, and I still have no clue what they want from me. So I ended up panicking, hiring somebody who was called a CPA. Back then I had no idea what it meant. So that guy gave me two bills, one that I had to pay to the IRS and one I had to pay to him. Both were pretty big. And I didn't like that, so I decided, well, that's a survival skill. So I need to learn how to do it, which I did. And shortly after that, I decided, well, I kind of like it. I'm going to help other people to not be taken advantage by the IRS like I was in my first year. And yes,
that seems to be a big problem. There's a lot of people that don't know where they're starting from as far as the IRS and income tax and CPAs. So the fact that you went and found it all out for yourself is great, and now you're able to help others. But you help specifically in the real estate investment area?
That is correct, yes. All clients of my firm are in real estate. That's the only type of clients we take, and I highly believe in having a niche and specialty, because if people come to us and they have questions about taxes and oil and gas in farming and international, whatever that is, we say, well, that's not what we do. We do real estate better than anybody else, and that's the only thing we will work on.
That's right. You're a specialist within real estate rather than being, a general over everything. So, you can only expect to get better service from a specialist. So what led you to focus on that real estate industry then?
Believe it or not, it actually was by accident. I had a few clients initially who were in real estate, and then one time I went to a local real estate club to do a presentation where they asked me to explain a few specific issues on depreciation in real estate that they struggled with. So I came in, gave a presentation, and suddenly, like, those 30 people rushed to me after I finished and said they wanted to make an appointment with me. And then it dawned on me, I'm like, okay, well, I could make that a specialty, which I did.
So you became the go-to person right then, and I guess you were just a white belt at that point. Is that right?
It was worse than that. I will tell you a story from that very first meeting, because after all of them booked appointments with me, we all go to a restaurant to socialize. And we're sitting at a table. I'm surrounded by real estate investors, and they speak that strange language. It's kind of English, but not exactly. And the first thing I do after that, I go back to my car, I take a piece of paper, and I start writing down terms that they used, because they were talking about something subject to triple net lease. I had no idea back then what it meant. Now, now I teach other people what it means, but back then I had no clue. So yes, definitely white belt, if not worse.
So you just dove right into that situation and you learned everything about what some of the issues are in real estate. So tell us about some of the problems that a real estate investor might have that they need your help with.
We actually have two sides to our business, because one is strictly taxation. People come, we can do a tax return. That is very much needed service. We are very good at that, but it's one part of the equation. The other part is, here is the sad truth that you will not hear when you talk to real estate promoters, so-called gurus, or when you read, like, let's say on Facebook, how all of these people brag about their tremendous success. The truth is that 95% of people who try real estate fail. They lose money. And part of our mission of being real estate professionals, real estate advisors, is we actually help people not lose money, which is not exactly tax preparation. It's more like business advisory specific to real estate. So to give you an example about that is, okay, people love those shows on TV, flipping houses and whatnot, and they believe that all you need to do is buy a house, hire some contractors, fix it, and then you put money in your pocket. That's not how that business works. I actually taught a class, which was recorded and available, and the class was called How to Lose 100,000 in Real Estate. That was the name of the class. Very popular one. And I tried to break down the numbers in real estate business, show this. Do you want an example? Because we can go through that real quick.
Yes, definitely love an example.
Okay, let's take an example. You go on Facebook, for example, and join a local group of real estate investors. Like, I'm based in Houston, Texas. We have several of those groups. Any major area has local investor groups on Facebook. So you go there and people post deals. So there is a house that you can buy, say they put it like for 50,000 is purchase price, and then they put ARV number next to that. ARV stands for after repair value. So basically what you can sell for after you fix the house. So here is a typical number you can see on that deal. 50,000 you're buying it for, there is 25,000 in repairs, and ARV is 90. So people quickly do math and saying is, wait, 50 plus 25 is 75. And 90 I can sell it for. 90 minus 75, 15,000, great. I'm making 15,000 profit on that deal. Reality of that, you bought the deal, you already lost money. There is absolutely no way to make money on that deal with these numbers. And that's what we explain to our clients, why this is happening, how you really should look at your numbers before you even consider buying a deal where you are guaranteed to lose money at the end.
So let's talk about that. This situation, $50,000 property, $25,000 in repairs. It looks like we're going to make $15,000, but where does that money go?
Several areas, actually. So there are a lot of things that are not taken into consideration when you look at that. That's even assuming that the numbers are correct, which most of the time they are not. What I mean, numbers are not correct. Whoever offers you that deal estimated repairs to be 25 grand. Well, in reality, it's often 30 or 35, and sometimes worse, because everybody who sells tends to sugarcoat the deal, and sometimes it's inexperience, sometimes questionable ethics, but as a rule, that number will be on the low end. So if somebody says 25, expect more. Then if somebody tells you ARV is 90, you expect they have done their homework. Not necessarily the case. So it may be optimistic, maybe 90 is really 80 or even 85. So if we have 85 instead of 90 and 35 instead of 25, we have zero profit right there. But even assuming that the numbers are correct, let's say that there actually is repair cost is 25 and it can sell for 80. This is what people totally forget about. First, there are closing costs on both ends. So when you buy, you have to pay, and when you sell, you have to pay. And even if people are self-assured and saying as well, I won't need a realtor to sell it. First, I strongly disagree. Everybody needs a realtor to sell it. But even if you cut out realtor, you still have closing costs. There are title insurance, there are all like lawyer fees, recording fees, all kinds of stuff. So several thousand will go to closing costs. Then 25,000 rehab takes time. You cannot do it 1 week. So we are looking at least couple months, and more realistic, probably more than that. But for those couple months, you are going to pay for insurance, for property taxes, and then most importantly, where do you get your money? If you have cash, and cash you will mean, if you have 75,000 cash to do that deal, then maybe you can pull off some marginal profit. But if not, you have to borrow money. And people forget that borrowing money is not free. You are paying a lot of money to borrow funds necessary to complete that transaction. And I break it down in my course. And when we look at that, it's like, no, there is nothing left. And that's assuming, like I said, the initial numbers are correct, which is rarely the case.
So these shows that you see on television, obviously they make things look great, as well as the investor groups that are in every town and city across the country make the whole real estate world look great. But you're saying that 95% of people don't make money?
That is correct. And if you talk to any real estate professional, anybody who is in this business, they all like have that face palm about those shows. Yeah, the numbers and the process that these people show has nothing to do with reality. That's not how it works. That's not how you buy, not how you rehab, not how you sell. It's TV show.
So for these people that are sitting at home and watching these TV shows, are these the people that are just jumping in and say, okay, I've got a little spare cash here, or I can go and get some money here, and they're throwing it at something with no experience? Is this an education problem more than the real estate industry doesn't work?
It's definitely an education problem because the real estate industry does work. These people jump in not necessarily with lack of education, but with unrealistic expectations, I would say. And those expectations are based on TV shows or on seeing other people bragging about how much money they made by posting, photo of a check on social media, by speaking at some networking event, and people take it at face value. Well, in reality, a lot of those people who brag and those who teach don't really know what they are doing and don't have hands-on experience.
So what does a seasoned investor look for then when they're looking at a deal? What do they know that somebody without the experience is going to make a mistake on?
If I could answer your question in a few minutes, I would be a very, very wealthy person right now. Yes. Basically, this is my recommendation to all new investors who are considering that. Start by networking with local investors. And by networking, I don't mean attending classes. Attending classes is good. And that's kind of ironic. I teach classes. I'm saying, well, yes, I do want people to come to my classes, but classes do not, they give you excellent information if it's a good class, but they do not show you the actual field reality. So your best bet is to talk to people who are in the field and ask them about, tell me about your last deal. How did it happen? How did you find it? How much did it cost you? How much did you make? What did you learn? What mistakes you made doing that before actually trying it yourself? It's sort of, in anything you try in life. before you're doing this, I have a friend who decided to take mixed martial arts without actually having any prior experience in any sports or anything. He thought as, well, I can do it. Well, he was kind of like badly beat up on his first fight and never doing that again. To me, it's like before doing that, maybe you should, get some better understanding of what is involved. I call myself a black belt in real estate taxation. I actually have a black belt in martial arts too, and I wouldn't do mixed martial art fight today because I actually know how difficult and dangerous that is.
Right.
And people who go into real estate without understanding, just watching those fake TV shows, like those people get burned pretty badly.
So for people that don't have the knowledge yet to go and do it themselves, are there opportunities to work with seasoned investors and
Yes.
maybe, put their money into a deal and make a percentage of the profit?
Yes, of course. Here is a thing I did here in Houston in our real estate community. A couple months ago, I brought in the same room, I hosted this event. I brought 12 most well-known real estate coaches who are local here in Houston. And they shared the stage, answering in round-robin style the same questions. And the first question, actually, I asked everybody, I said, okay, guys, we all know that 95% of people fail, so tell me why. And then those coaches explain why. So they all have different styles. People in Houston could sign up with some of those coaches to get a head start. And they have a choice of different organizations, different people. That's if you want to get somebody to take you under their wing. If you want to just learn it yourself in the School of Hard Knocks, that's possible, just takes longer and could turn out real expensive.
So in a city like Houston, what is the best thing to do if you are starting out yourself? What kind of groups should they be looking for?
Like I said before, my suggestion would be get involved in local meetups and local real estate clubs. Like, we are the fourth largest city in the US. We have at least 12 real estate clubs that are active, which have live events. And we have maybe another 20 smaller meetups. So literally every day of the week, you can go to some meeting and meet people who are doing that. And I think that's really a requirement when you don't have prior experience and trying it for the first time, is network with other people, get some knowledge from them. And then, of course, after real estate knowledge, there is professional knowledge. So if you want to, we can talk a little bit about my side, after all, like accounting and taxation.
Right, definitely. Let's talk about that, because that's what we're here for, is to find some of those, pitfalls where people fall down that they do need help with. So talk about the taxation and real estate and why that is a problem.
Absolutely. Well, any taxation is a problem. Many people will tell you, especially libertarians out there, yes, taxation is theft and all of that. Okay, on a more serious note is, here is why taxation is difficult. Real estate is a very special kind of business. If you have regular, familiar business, let's say you are a consultant, or you are selling some online products, or you are a caterer, like any type of common businesses that we all know people run. Those businesses are pretty straightforward when it comes to taxation. You take your income, you subtract your expenses, whatever is left, you pay tax on. Kind of straightforward. And a lot of people can learn it fairly quickly by themselves. You can even do your tax return yourself in many of those situations. And then comes real estate, where people are confused immediately is IRS distinguishes two types of businesses when you deal with real estate. One is having rental properties, being a landlord, and the other is pretty much everything else. In reality, there are like more than two variations, but two are very distinct. Renting out rental properties and doing everything else. And the distinction is critically important because the IRS rules are completely different. The IRS forms are different. And people get instantly confused about it. When I say people include CPAs. We see a lot of professionally prepared returns by CPAs where real estate is reported completely wrong because they were trying to treat it as they would treat any other type of business, which it's not. And if you are a landlord, you have generally very beneficial tax rules. People talk a lot about how real estate is a tax shelter, it has tax advantages, blah, 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 all of that. That is true if you talk about rentals. Now, if you deal with anything else, like what those shows tell you is to do flipping, for example. Flipping does not have any tax advantages. Flipping, if anything, might have tax disadvantages. That the profit you make after laboring hard to rehab that property and sell it, that profit is taxed at a very high rate. The new tax reform made it slightly better. That's welcome news, but it's still pretty high taxation. And people confuse those two. We have a lot of questions like saying is, okay, when I say a flip, do I pay short-term or long-term capital gain? Okay, to begin with, you don't pay capital gain at all. The whole concept of capital gain does not apply to flipping. And when we say to people, they're saying is, what are you talking about? Well, I'm talking about you are doing business that does not have anything to do with capital gains. And they say, what about the rest of that? Depreciation, 1031 exchanges, whatnot? None of that. That is for rentals. So that's immediately where people get very confused. And from here, it can get worse. So a critical point I'm trying to make here is before you even try to report anything or talk about taxation, we need to figure out what is your business model or exit strategy. What are you trying to do with your properties? What are your goals? And that's something that if you just go to H&R Block to prepare tax return, you will never get to talk about that. Their job is, okay, show me what you've done. I'll put it on the tax return in the best place I believe it belongs. And you keep your fingers crossed that they understand at least some real estate and will put it on the right form.
Of course. And that's with 2 weeks of training that they get, right?
Yes. And I'm not specifically singling out H&R Block or anything else, because like any big company, they have a lot of very competent people. I have some friends who work for H&R Block or Liberty Tax or any of those big franchise places. But you roll a dice. If you come across one of those competent, knowledgeable people, it's great. Unfortunately, the majority isn't. So if you go to them with a simple return of being a realtor, which is relatively simple, but even then you have issues. But realtor, can you expect well-prepared return in franchise places? I would say you have a pretty good chance. Real estate investor tax return, your chances are not good that you will have it done well, just because they are not familiar with those particular issues and start confusing. Like I said, that example, you can do a flip and they will try to report it as capital gain, which is wrong. Or they put real rental property on that report. Or why talk about franchise places? A lot of people trying to do returns themselves, and they answer that interview that TurboTax puts you through, and at the end forms are created, everything looks good, but what they don't know is, well, depreciation was not created at all. And then ask, what is depreciation? Well, that's why you need to know a little bit about real estate. Yes, depreciation is a critical concept that has to be explained.
Right.
I remember one time I was at a large CPA conference. The guy finished his presentation early, and he asked, there are like 200 CPAs in the room, and presenter asks, okay, I have a little bit of extra time. What do you want me to talk about? And this crowd of CPAs chanting, depreciation. Yeah, which, well, that's complicated topic. Even we professionals don't always understand it.
That's a little bit scary. So what you're saying is you've got to set up the system first for dealing with the best tax benefits. And does that involve the type of corporation that you're running your business through?
Yes, one of the biggest and most frequent questions we get is, what do I need to form when I start my business? LLC, this type of corporation, that type of corporation. People are very confused about that. Unfortunately, there is not a very short answer. I can give you as short answer as I can to this question. Okay. That answer is, first, when you form a company, in most cases, you do not get any tax benefit from that. The tax benefits from business entities like corporations come in specific situations. Most people who start in real estate business do not have those situations. And they falsely expect that if they create an LLC, they will suddenly get some new tax deductions. No, the new tax reform that they just introduced to us, and it already kicked in. We are in 2018 right now, so we already are dealing with the new rules. The new rules made it even more obvious that they intentionally build it to afford the same tax advantages, the same benefits to people who do, as well as people who do not have companies. Like a lot of people talking about, what about this new 20% deduction? I need to create an LLC. No, you don't. That deduction is available to, if you are eligible for that, you will have it whether or not you have an LLC. So when you create an LLC, it's primarily for asset protection, not for tax benefit. To protect you from lawsuits and legal liability, but that's not my area. I'm not an attorney, cannot talk about that. Mm-hmm. As far as entities for taxation, once your business becomes substantially profitable, it's time to have a one-on-one with somebody like me to discuss the best entity for your situation, because there is no one-size-fits-all answer to that. It really depends. But if you are just starting, I would say don't worry about tax benefits from entities. You may want to create LLC for legal protection on the advice of your attorney.
Okay, so Michael, you've been in the real estate tax industry for over 20 years. Can you share an example of somebody that came to you for help? What kind of problem they were having and how you were able to help them solve that problem?
Some of those situations are actually described in the testimonials that you can find about our company, like some on our website, some on Google, Yelp, Facebook. Like if you look us up, people write how we help them. But example would be, I will take a couple of the more recent examples from people who have not written testimonies yet, okay? So we have a person coming with real estate transaction, and what the person had was a major piece of, not major, I would say, but, decent piece of land in the rural part of Texas, which they just held casually, didn't want to do anything with that. But they got right now approached by one of the major retailers, and my business is highly confidential, so I'm kind of, as you notice, not giving you a lot of details. I'm concerned about confidentiality. Like, if I tell you who approached them, what is the acreage, maybe you can figure out where it's happening, and I have to be careful about that. So anyway, they approached but one of the big retailers who decided that they want to buy that land and build one of their stores. And my client didn't really want to sell, So they named a high price just so these people leave them alone. To their shock, the guy said, fine, we're buying. Problem here is that my client right now would be looking at about $750,000 profit on that land, which is subject to capital gain. And when we do our calculations and all of that, okay, they would very well be looking at a tax bill in hundreds of thousands area, not talking 10,000. We're talking clearly 6-digit number on the tax. And we explained to this client a strategy known as 1031 exchange, where you, instead of selling, effectively exchange property for a different one. But they did not have the property they really wanted to buy. We said, well, we have a way that we can show you where you don't really have to exchange it for another piece of land. You can put it in a certain type of investment, which is very passive. You don't do anything. It creates income for you. And you don't have to pay this huge capital gain bill to the IRS when you sell. So you can sell, use that money, convert it into income producing asset and not pay taxes. So needless to say, they are pretty happy about that, especially because they asked that same question in a couple other places which were not real estate places, and they've heard from those CPAs that nothing you can do about that, you got to pay taxes. Well, we told them, no, you don't. There is a way around that if you plan ahead. Now, if they already sold and came to us, which some people do, saying is, well, I sold and made money. How do I avoid taxes now? Well, now it's too late. You should plan for these things before you sell, which fortunately we could.
Well, that seems like you saved him hundreds of thousands of dollars by
we did, yes,
that, and put his money to work for him elsewhere, which is a fantastic outcome. Now, Michael, we've kind of talked about two sides here. There's the real estate investment industry as well as the tax industry, that you give advice on both those things. So let me ask you, what's the most important question a real estate investor should ask before getting into the real estate investment business?
My answer to that will be that the question I recommend they ask first is, what are my goals? Mm-hmm. In real estate, there is a very famous website, which is like a national forum for real estate investors, has huge number of investors nationwide, called Bigger Pockets, biggerpockets.com. So people go there and they network, they get education from each other, from specialists, like a lot of benefits you can get there. I'm a top contributor there to the tax and legal forum on Bigger Pockets. Why am I talking about it? Because just recently I had several discussions there that all went the same way. Somebody posts a question, and those are type of people that you, Neil, are talking about right now, new investors just getting into the business. And they're trying to say is, okay, what is the best thing I can do to save money on taxes because I'm brand new and I'm getting an offer on this property. So what do you guys recommend? And then all of those people who are not really tax experts try to jump in and share. That's what I use. That's what I use. That's what I use. And I chime in and I'm saying, guys, stop. The first question is, what are you trying to accomplish? So you are buying a property that you intend to flip. What for? Are you trying to generate some cash so you can pay your current bills or pay down your debt? Are you trying to generate cash so you can buy more properties and reinvest into your business? Is your goal to generate income, current income, so you can quit your job? Is your goal to start building wealth so eventually you will have passive assets to live off of and pass down to your children and so on? Because depending what you want to do, some of the suggested strategies are not only not helpful, they are counterproductive. It all depends. So the first question is, Forget about taxes, forget about LLCs. Your first question is, what do you want to accomplish by becoming a real estate investor? And everything falls from there.
So it sounds like there's a lot of people in these groups and forums that are giving advice, but they're not necessarily placed to give that advice with the experience that they have. So what should a potential investor be looking for when it comes to getting advice from somebody that's been in the business for a while?
That's the same question we can ask about whenever you need some professional help. Anything. Like you need a doctor, you need an attorney, you need a car mechanic, you need a psychologist, or you need accountant. And it's funny because accountant is part psychologist too in what we do. Like a lot of talks that we have with our clients, sometimes I feel like I work as a therapist. But what we are doing here is, okay, what to look for. Obviously, I would say the number one thing for real estate investors would be find a specialist. It's the same. My first example was a doctor. If I have a specific problem with my lungs, I'm going to search a doctor who is lung specialist. If I'm divorcing, I'm going to look for divorce attorney, not personal injury attorney. So same thing with real estate. If you are looking for an inspector, you want an inspector who deals with real estate investors. If you are looking for a realtor, look for a specialist who deals with real estate investors. And looking for an accountant, exactly same thing. Look for somebody who does that. Okay.
Well,
and
you
we have a lot of people actually who come to us, and our selling point is the moment we mention is that we exclusively serve real estate investors. For a lot of people, okay, that's it. That's what I was looking for.
Well, you certainly are that specialist, Michael, in your area. You're a wealth of knowledge. Now, anybody that is looking for that kind of help, whether it's in the Houston area or outside of Houston, how can someone find out about Michael Plaks and the REI tax firm, and how you can help them?
Okay, finding us easy, but before I give that information, I want to make sure we are clear on that. We serve clients nationwide. Many times we mentioned Houston. Yes, that's where our physical office is, but our clients are in all states. And currently, with today's technology in our time, there is no need to be in the same physical area, the geographical area. The only advantage people who are in Houston have is they can come to my office in person and shake my hand. But right now it's flu season. I don't want to shake anybody's hands anyway. Right. So jokes aside, is we can just as efficiently work with anybody, no matter where you are. We work with all states. Everything is electronic. We are very conscientious about security. We have implemented very secure systems to communicate with our clients because information is highly confidential. We know that. We care about that a lot. And things are very efficient. We communicate electronically. If we need consultation, we can do. Okay, you and I right now are in different cities and we are talking. So that doesn't stop us. And if we wanted to, we could go on video chat, do the same thing. Now, as far as finding us, our website is reitaxfirm.com. And REI stands for Real Estate Investments. So REI Tax, TAX, reitaxfirm.com. The best way to contact us is go on our website. We have a form to contact us to answer a couple questions, and it immediately goes to my office and we will get back with you. You can send us email through the website, or directly it will be like service@reitaxfirm.com, or you can call us. The number is on the website, but it's also 713-721-3321. So 713-721-3321. but you will still get faster response if you contact us electronically than on the phone, most likely.
Well, Michael, it's been a pleasure. You're certainly a wealth of information when it comes to real estate investment, all things real estate investment, not just tax. So anybody that's listening and needs help in that area, I encourage you to get in contact with Michael Plaks at reitaxfirm.com. And Michael, it's been a pleasure. Thank you for being a guest on Business Authority Radio today.
Thank you for inviting me. If I'm allowed, I will throw just one last thing. Even if you feel you don't need our services, still visit our website because we offer tons of free educational resources there. Blogs, videos, all kinds of stuff that helps real estate investors nationwide. Thank you, Neil, for having me. It was a pleasure.
Excellent. And to our listening audience, if you like what you hear, hit that like button and share, and we'll see you next time on the show.
You've been listening to Business Authority Radio with Neil Howe and Greg Williams. To learn more about the resources mentioned in today's show or to listen to past episodes, visit businessauthorityradio.com.